Hi, this is Pat Moorhead with Moor Insights Strategy, and we are live in an undisclosed location, possibly a bunker here in California. Welcome, everybody, to episode 141. We wanted to make sure this happened. 2 weeks ago, I, had a brain something, and then we did, 11 topics, I think, last week, which was awesome. But it is 6:30 a.m. here in California. And I'm here with my incredible and amazing and young co-host, Daniel Newman. How you doing, buddy?
Hey, good morning from an undisclosed location in California, in Santa Clara, at an embassy suite right outside of Cupertino. Wait, what? Oops,
I'm on the ninth floor. What are you on?
I'm on the fifth floor because I only go on the floor 6 and 5 when I travel. It's a requirement.
Yeah. Darn it! I blew that up. If you turn 9 upside down, you get to 6.
I am all in right now, my friend. But hey, I was thinking, what do you think about doing a 6-5 as intended?
Well, that's exactly what we're doing. I mean, this is the way it's intended. It's just kind of off the cuff. It's fast. I don't even think we did notes for this. I mean, I didn't do notes. We picked topic in the car coming back from SFO, but it is pretty awesome. What I'm happy about is that when you stay at an embassy suites, every room is a suite, and I feel like a king. Now, there might be mold in the toilet and in the shower, but that's okay, Hilton. We love you.
You know, Pat. We talked about this. This is what happens when you have a good asset and you let the asset kind of mature and you don't keep up with it. It's like a house that was built in 1985 that was the coolest state-of-the-art house with all the finishes and fixings. But then you don't do any modifications, and now it's 2022, and you're like, what's up with all the porcelain, and what's up with all the wood, and why is the TV still a CRT with a giant back projection, rear projection?
That's so funny. I like that. Well, I doubt that there's anybody listening to this podcast who is a milker of assets, unless, of course, they have a portfolio and they're a 100 millionaire or a billionaire, where you have a diversified portfolio of high flyers and dogs you can milk. But hey, let's get to the action. We are the 6-5. We do 6 topics, 5 minutes each, analysis only. You can read the news anywhere. We also talk about publicly traded companies, but don't take anything we say as investment advice. Please seek out a professional. We have a great show today that we thoughtfully architected in about 10 minutes in the back of an Uber coming back from the airport last night. But we are talking Twitter and the latest in the saga that's going on. We're talking AMD and the revised guidance. We're talking BoxWorks. We're talking IBM, Micron, Google, and Cloudera. So Daniel, let's jump in here. Elon Musk, it's on, it's off, it's on, it's off. And Elon Musk just announced that, he wanted to go in and do it again at the right price. Coincidentally, after 4 or 5 days of being grilled on Twitter for some of the some of the texts that were sent back and forth between him and JCal and a couple other folks. So is this thing happening? What the heck's going on here?
Yeah. So first of all, how entertaining is this? I mean, you and I tend to provide our color and analysis on things that are technology enterprise focused, sometimes more practical, making companies aware of what the best technologies. But this is just fun. I mean, Here, first and foremost, is the irony lost on you that all the people that really despise Elon Musk and absolutely did not want him to buy Twitter are now emphatically pushing Elon Musk to buy Twitter? It's because it's never been about actually what the world wants. It's about loving the cancel and the punitive nature of this. Like now it's like, oh, well, yeah, you probably paid too much and it's going to be terrible for you. And you're going to have to figure out a way to dispose of $44 billion in cash. And now everyone wants him. And then all the people, of course, that want him to own it are hoping he gets out of it. So that's the first thing that I noticed is really funny. here's the bottom line: is you and I are not lawyers. Okay, we're not investment advisors, and we're not lawyers. So it's important that we say this because this is a legal situation here. But I think what happened is Delaware is incredibly favorable to corporations, and despite the fact that Musk waived diligence, but had some level of grounds to stand on around the potential fraud with the spam and the bots and the whistleblower. Clearly, there was not enough evidence that rose to the surface that Musk felt that he had any real chance of coming out as the victor in this thing. And so I think it kind of came full circle back to, well, I guess if I'm going to do it, I'm going to do it on my terms. And, on his terms now is basically, I'm going to get out. I'm going to stop this lawsuit. I'm going to stop paying fortunes for lawyers. We're going to figure out a way to get this deal closed. Of course, I don't care how many billions someone is worth. Creating $40+ billion in instant liquidity to write a check for something like this is not easy to do. So there's a lot of questions on how he's actually going to pay for it. He doesn't want to sell $40 billion worth of Tesla stock. That's going to be really, really bad for the company if he has to sell that in a block. If he can even sell that in a block. That's the thing people don't tend to understand. You can't just liquidate that kind of volume overnight. But the long story short is I still kind of like it, Pat. I kind of, in the end, hope, Twitter is my favorite social stomping ground, but there is a lot of issues with it. The bots are an issue. Maybe it's not a big enough issue to cancel the deal, but it's a big enough issue that I'm hoping he'll come in here and help make it better. I'm also hoping for more balance. Like you said, I've always considered myself very centrist, very common sense with my arguments. And I feel like we've gone too far to both extremes and we've lost the ability to have thoughtful interactions online. I'm hoping that the implementation of AI, of moderation, of thoughtful moderation, because obviously that's not what he stands for, but thoughtful moderation. So less abuse, more discourse, more interaction. But in the end, Pat, I still am not 100%. I'm going to say this now on the record, not 100% that there's not more games being played here, that this was purely just, I'm going to buy it at 44 billion. I think that's what's happening. But if it changed, I wouldn't be surprised.
Yeah, the spectacle is awesome. I really do love it. And it has chapters. So it's kind of like a mini series, right? And it's a mini series that I think of something that invests you and I. You and I have invested a lot into Twitter. Twitter has done a little bit for us too. Gave us a platform to toss out 140 and 280 characters. By the way, I got edit capability yesterday, so I'm super duper happy. But I am sick of world leaders getting canceled on the platform. I mean, we're not the only ones. I mean, leaders out of Germany, Merkel, right? She's concerned about it, that it's become such an important platform. They are revenue per head, a fat company compared to Meta and other social media plays. So I think one of the first thing Elon is probably going to do is come in and literally automate the heck out of the company, right? You and I talk about automation all the time. And I do believe that Musk and his closest allies have a really good handle on how to do that. So, Daniel, let's move to the next topic, and that was AMD's revised guidance. I got some text last night while I was on the runway to check out some information, but AMD revised guidance last night, and it's interesting. I had expected this earlier when Intel did their big warning, but AMD came out late. So a couple things that I think are important to understand is it's really just the client business, right, which is down 40%. And that's in comparison to Intel's that was down 50%. Also, other areas of their business, one in particular is doing exceptional. Data center is going to be up 45%. Gaming, right? If you recall, NVIDIA was down a substantial amount of money, and that's going to be up 14%, which is just mind-blowing. And something that skews the numbers a bit is Embedded, aka Xilinx acquisition, up 1,500%, because There was no revenue or very little revenue in that area. So probably a quarterly number is more important, and they were up 4%. A little lower than I had expected because of all the business they do in automotive, but up nonetheless. So AMD for this upcoming Q3 up 29%, and we'll see in a few hours what the investors and how they take it. Net, it is still a very good midterm and long-term play. It's nothing that the company did wrong. It has everything to do with the macro environment. So I can't say the company's making a mistake. I am very interested to understand why they felt it a quarter later. Is it because they have most of their business that's going to processor in a box where people are actually assembling it? I need to get underneath that. I think we'll get a better story once we see what happens to the OEMs like HP, Dell, and Lenovo.
Yeah, it's also going to be really interesting to see what happens to Intel, which should be reporting very, very soon. I think last quarter, Pat Gelsinger said he thought we're there at the bottom or very close. So is this the bottom? Pat, I think you hit it on the head. A couple of things I think worth pointing out. One is AMD's down about 8% as the market's open. Sometimes we forget because it's 6:30 in the morning here, but in other parts of the world, people are awake. I always feel like I'm such a waste when I'm in California.
Crazy day traders.
Yeah, absolutely. And I think that this actually really makes me feel validated and vindicated in things I've been saying, because I've said for a long time, enterprise is going to be robust and consumer is about to hit the wall. I've said this for 3 quarters now. And for a few quarters, it didn't actually happen. And I think there was some backlog. I think there was lagging. I think there was orders and fulfillments and shipping. And I do think people are slowly recognizing the economic situation. You and I stare at CNBC and Bloomberg all day, and we listen to it, and we talk to tech companies. I think a lot of people are walking around with their head in the sand, have no idea what's going on. They see jobs reports, and they're like, oh, look how low unemployment is. And that's because no one's working, because we've been giving people money for 3 years now. It's just the truth. And this is not political. It's economics. By the way, Go back to school, go to class. You can have a very low unemployment rate if labor participation is low enough. And I know I'm a little sidetracked from AMD, but long and short, Pat, data center good, really good. And I think they're going to do well when they have their next release coming out. The PC business isn't an indicator of AMD. PC is an indicator of, we sent money out of helicopters for 3 years. People bought a lot of PCs. Companies had too much capital. They updated and upgraded and added and hired. Hiring slowing. I don't care what the jobs report says. You don't need as many PCs at work, and you don't need as many PCs in the home, and people don't have as much disposable income. So there you go. That's what's happened. Let's go to the next.
Yeah, I just wanted to do a boomerang. The commercial PC market's actually okay, and it's actually still growing. The issue is consumer. Consumer hit a freaking bottom. I mean, Apple was down last quarter with MacBooks, and some people said, oh, that's because they were in a products transition between M1 and M2. I don't think that's accurate at all. If you look at HP and Lenovo, who are very consumer focused, their numbers were not good, driven by the lack of consumer. They did drive commercial, though. And then Dell came out, who had double-digit growth in commercial. So this is very much consumer confidence type of thing. Ironically, something we thought that was going to happen at the beginning of the pandemic. But with those stimmy checks, people had the money and they rolled them into electronics.
Just stick with me. It'll slow. Anyways.
Yeah. No. This is perfect. Let's go into the next topic. Kyndryl made a big announcement with IBM. What's
Microsoft.
Oh, I'm sorry.
Yeah, no, it's okay. This is the one that I threw out at you. So Kyndryl Microsoft made a mainframe announcement, which is kind of interesting because we all know that Microsoft is sort of not really in the mainframe space, but at the same time, what we've seen over the last few years is a lot of the big public cloud providers are putting more effort in to enable certain mainframe workload migration, either off mainframe or also collaboratively with the mainframe. And I think that's something that you and I have reiterated endlessly on this show. The mainframe is not dead, okay? In fact, it's going to continue to be really critical, especially in highly regulated industries. Companies are going to continue to need it for the security, reliability, resiliency. And what's happening, though, is there are parts of the enterprise that probably benefit more from cloud architectures or, modern cloud architectures. So what's basically going on is Kyndryl, which is from IBM, so that's probably what you were thinking, Pat, has their Z Cloud, which is basically one of its big business units. According to our mainframe analyst, Stephen Dickens, he's estimated that of the around $19 billion in top line revenue that Kyndryl has, $4 billion of it is tied to the mainframe. So a really important part of the business. And so basically what's going on is Kyndryl and Microsoft announced that they're going to connect Kyndryl environments to Microsoft Azure-based Power Platform. Wow. Okay. Very interesting. So the Z Cloud becomes basically capable of connecting to single-tenant customer-hosted systems in the Microsoft Cloud. And in long story short, by doing this, they're going to basically create 4 advantages for their customers. It comes down to accessibility, innovation, collaboration, and integration. So, the ability to access and connect mainframe data to the cloud. This is also going to drive, with the Power Platform, the ability to create applications across the DevOps pipeline. From a collaboration standpoint, you can actually have the mainframe talk to teams using natural query language, which is pretty interesting for both productivity and execution. And then and from an integration standpoint, you can take mainframe data and build low-code, no-code applications on the Power Platform to empower this citizen developer movement, which is a big deal to Microsoft. As I kind of see it as a whole, this is a part of this evolution that's going on where mainframes will long be critical to many, many industries. That's why it's driving such a big part of the Kyndryl business. That's why IBM has long been so committed to it. And that's why companies like Microsoft and AWS have been aggressively building strategic migrations that don't necessarily take everything off the mainframe, but give a pipe that connects data from mainframe to cloud in a way that's both accessible and secure. So I think it's an important partnership. And again, I think the mainframe is going to be around a lot longer than people think, because we've been getting rid of it for the last 50 years and it's still here, and that's not going to change.
Yeah, good stuff, Daniel. This really goes under the moniker, us analysts, we like to put everything in their box. This is mainframe modernization, right? It was interesting about 3 years ago at AWS reInvent, Andy Jassy had put up, first of all, knocked Oracle like he does every event, but he also put IBM in his target, and he announced a mainframe replacement program. What's interesting, here we are, and we saw this announcement between IBM and AWS. It is now a mainframe modernization program, which is almost an industry, or at least an AWS realization that mainframes aren't going away, but let's help our customers to modernize them. And one thing I want to point out, when Daniel says Power Platform, he's talking about the Microsoft as opposed to the IBM Power Platform, which is the server platform that they have. So now, IBM through Kyndryl and Microsoft have 2 partners, and who knows, maybe a Google Cloud next week, they'll come out with a mainframe modernization type of program. This is clearly in the bead of Kyndryl, right? As an IBM spinoff, they were doing a lot of this type of managed services and outsourcing type of deals. So I don't know, because I don't follow Kyndryl as closely as you do, whether this is a trend or just a one-off. But it's good to see Kyndryl working with other players out there like Microsoft. Are you going to boomerang?
Nope. Good job.
Breath. Okay. Hey, let's get into BoxWorks 2022. I spent half my day yesterday in the morning in Austin at the analyst event. And I always appreciate how much time CEO Aaron Levy will give to it. He's very conversational. He's easy to get to know. Of course, I had to first thank him on his upgrade that he got that sent his stock up about 8%. But I really just saw that not as oh, what a surprise. It was more like, well, it's about time people see the value of Box, because as a company, it keeps moving along. And for those of you, I'm sure all of you have used Box in some way, shape, or form, but essentially they're the masters at content management, securing it, getting signatures on it. But in the past few years, Daniel, like you and I have talked about with the SaaS offerings, everybody is finding the need to build some kind of a suite out of it, okay? And the highlight of this event and the analyst was how they are doing in some of these areas. So first off, Box a few months ago had pre-announced that it was doing what's called Box Notes, which is exactly what you can imagine. Their take is really about simplicity and the ability, oh, and by the way, getting it for free rolled in to a more of a Box content. Notes is exactly what you would expect. The other thing that is coming beta in November is what's called Box Canvas. And many of these SaaS companies are, and I think, you even talked about Salesforce adding it, is a collaborative environment where teams can work and put content in. Consider it Figma for everybody else, not for the designers, but for the marketing people, for the sales people, for the finance people, where they can work on something at the same time, and it's called Canvas. And the final thing that they talked about at their show was more information on what's called content insights, which will be available this month. But essentially, it's with anybody who has a content solution, you can get basic type of stuff, information on who accessed it and when did they access it and what time. This gives insights into anything that you would want. I mean, about demographics, how long that they looked at the content. And I wouldn't call this is not an external marketing tool, I think. I think it's more of an internal tool to know who internally at the company is viewing your content. I wrote a Forbes article a couple months ago about when they first introduced these, and I have a draft of an article completed talking about further information on all of these announcements.
Yeah, so good update there, Pat. This is one we'll keep pretty brief on my end. I wasn't able to attend BoxWorks, but I have been following your commentary, and we do follow the company at a high level. Obviously, content collaboration and management of enterprise content is critical, and this is what Box has been trying to solve for a long time. Question marks I have about Box, and I'll continue to have about Box, is: are they a feature that's a company now that needs to be part of a suite, or are they really in a position to run on their own? I think Aaron Levy's done a great job. I think long term, the company obviously has built a strong reputation. It's been a sort of constant target of potential takeovers, and I think that's because it has a lot of really great assets and capabilities that could be embedded inside of a bigger software suite. But they're also continuing to build and expand. To your point, they're building a more collaborative environment. They're building greater intelligence. They're building tools. But I think in an era of how we work shifting so rapidly, the Microsoft Teams, the Slacks, these are going to be the places where something like Box is going to be utilized at the highest clip. So I still to this day kind of wonder if a Box Salesforce deal could be in the future. But I need to check out all the announcements, Pat, see where it's going. But good overview. And
Boy, I got to tell you, that would be a great combination.
Wouldn't it?
Yeah.
I know. I love it. I've been using that as my favorite. When Business Insider calls us every 6 weeks to write that article again, the 15 hottest and most likely M&As in SaaS, just Box already. But you know what? At the same time, like they're doing good things. Believe that they have something, and sometimes being under someone else's.
Box has Box has whiteboarding too. I mean, it's just it's kind of perfect. I did ask Aaron about messaging, and he did say we're very happy integrating Slack and Teams and whoever else needs to be there. But I love that, Daniel. I get a big smile on my face. It's so smart. Okay, let's move into some chippery news here. We covered Micron earnings last week with a pretty big decline in the forecast. And then they follow through the next week and say, hey, we're going to spend $100 billion over New York over 20 years. Screw you, Texas. We don't need you. Take you and your horse a-packing.
Yeah, well, I don't have a horse, but you have several. So can I borrow one?
Sure. Time, buddy.
But anytime, I don't think I can ride. I would be thrown off the back. So
I'd love to see you ride. I'd get that on video and put it up there on the YouTube.
I'll be my 6 shooters on my hip, but that's Texas, buddy. Listen, this is just a continuation of the announcements that we're getting. New York, for whatever reason, is becoming a little bit of like the next Silicon Valley. I don't know, Pat, but we got Global Foundries, we got IBM Research, and now we've got Micron building mega fabs, $100 billion 20-year commitment with a $20 billion phase one. Talk about a big commitment to New York. Now, to the credit of the state, Pat, there must be some serious tax breaks in this deal. Like, because we obviously know right now no company is going to commit to any major project, whether that was Intel going to Ohio or this in New York, if the tax situation isn't going to be beneficial to them. Having said that, though, I mean, look, this is a really important continuation of taking what happened with the passage of the Chips and Science Act and making bigger commitments. Oh, Pat, by the way, tax break, it's $5.5 billion of incentives. So it's not inconsequential, and I'm not sure that's going to be all of it, but that's what they're saying is going to be in terms of incentives. You and I have talked a lot about Micron, and obviously the company has come out with some softer guidance, slowing numbers. The company had an incredible run during the pandemic, and guess what? This is literally the same thing we just talked about with AMD. Micron makes memory, which is tied directly to compute. There's a very strong correlation: more compute, more memory, and they have a pretty significant business tied to the PC. And so when you have a big decline in PC, so you'll see those numbers, you can be certain that it's going to be a decline for Micron. Now, the good news, and we've talked about this, is that Micron has also invested very heavily in diversification of its business to have more of the memory technologies for things like automotive, edge, IoT, data center, and those should be areas that could help the company keep a more robust footing. But long story short, we need to separate the short-term gyrations that semiconductors, booms and busts that happen every handful of years, and talk about the national security, technology leadership, and really the purpose that stood behind the implementation of the Chips and Science Act. And that is that the United States is almost 100% dependent on China and Taiwan for the manufacturing of all leading edge, and that we not only need more leading edge, but we need all manufacturing. We need capacity here in the United States. So whether it's Global Foundries, whether it's Micron, whether it's Intel, whether it's Samsung, or even TSMC, we need more capacity here. And so having more chip building here is going to be important. And Micron, I think, is making the right long-term decision to continue to invest here. But to your point, Pat, I'll finish where I started. Would have been awesome in Austin, but congratulations to New York.
Micron currently has the highest density storage and is first to market with DDR5. This company is going to do really well. Just like logic in chips, leading in transitions is a big deal. And whether it's memory, whether it's storage, whether it's things like CXL, Micron is leading in those areas over Samsung and Hynix. Challenges, though, I mean, I would say the biggest challenge and the biggest threat, I would say at the low end of the margin spectrum, is the new Chinese manufacturers that are standing up and building a bunch of memory. There was an interesting rumor about Apple, who is going to start buying its memory from Chinese manufacturers for its iPhone. Wave that flag, Apple. Anyways, I was very skeptical that Micron would have landed in Texas because their arch rival, Samsung, committed to $200 billion in 11 cities in Texas over 2 decades. And Daniel, don't you love, we should put out a number about what we think we're going to do in 2 decades, and forecast that and put that out there.
Yes. And I want immediate valuation and possibly even some liquidity based upon it.
Exactly. Pay me up front for it, please.
Give me 10%.
Exactly. But anyways, I was skeptical because I couldn't imagine both Micron and Samsung near the same city. As much as I would love to blow up and attack and blame our woke city leaders on shooing people away, I can't do that in here. I never thought it was going to happen, but I hope this is not a trend where semiconductor companies are not choosing Austin, but choosing New York. And New York for decades has been a leader in semiconductor research or even manufacturing. So congratulations to New York. Daniel, let's finalize this episode by giving a little bit of a preview of what is going on next week. A couple streams going on. Not only are you and I and the 6.5 going to Google Cloud Next and Cloudera Evolve, but we are also going to be virtually attending Ignite. So first off, Monday, right, will be at Google Cloud Next. Not only will there be all of those announcements that you would expect from Google, but also there's a lot of analyst meetings that we're going to be at, and of course the 6.5. I'm looking forward to Google really coming out and giving even more definition on an area that they land and expand, and that is machine learning and analytics. It's funny, Daniel, I talk to probably one big enterprise a week, not as much as some other analysts we know who might talk to 100 in a day, so I hear. But
bullshit.
But typically what they tell me, and it's weird, like they all use Google Cloud, but they only use them for analytics and ML. I don't mean only. I mean, that's a big deal. But when it comes to SAP, when it comes to VMware, when it comes to basic rudimentary workloads, those are typically going into Azure or SAP. So I'm really looking forward to that. Cloudera Evolve, heck, 6.5 is going to be there too. We're going to be meeting with senior executives. I will be actually kicking off Evolve, but don't let that be a reason that you're not going to attend. You need to go there. So there used to be an event called Strata that a lot of the data companies used to attend. I consider this the new Strata conference. And what you're going to learn about are ways to gain enterprise value through data. So if that's you, sign up, and I think you'll like it. Ignite, right? Microsoft's version. Why are Ignite and Google Cloud Next on the same day? It's maddening, right? Couldn't TK contact somebody or vice versa and make that happen? But I'm looking forward to all things new from Azure, all things new from Power Platform. And I think we'll also get some surprises on the operating system front.
Yeah, so you hit it pretty well, Pat. I'll add a couple of things and try to keep us here on time. I mean, first of all, very excited. The 6.5 will be crushing it at both Google Cloud Next and at Cloudera Evolve. Love Microsoft Ignite. Glad to see the analyst conference back in person. Can't wait to get there next time. We need to figure out a time travel situation, Pat, for you and I. Because also our firm will be at IFS Unleashed, which is a really kind of cool up and comer in the ERP space as well. I could be literally at 4 events same week. In terms of, I know, and Pat, we could do more. That's the sad thing. Like, there's probably more. I'm really excited.
In fact, I'm going to add an event that I didn't even put on here that I should have, and that was T-Mobile's analyst event, where I think I'm going to be seeing 2 of your employees.
2 of my colleagues, will be there, and I should be there as well, but I can't make it because of other commitments. Unfortunately, not only more events, but moving events around has caused a lot of conflicts.
Yeah,
T-Mobile's great to see they're having an analyst conference. So much going on, Pat. Excited on the Google Cloud front. A lot of innovation and announcements there, right ahead of Oracle Cloud World, ahead of reInvent, and now Ignite. We got all the cloud players that are going to come out with all their big innovation over the next few weeks. Super excited about that. Pat, the Cloudera event, like I said, I like how you kind of used it as a comparative. There's events that talk about new technology, and there's events that talk about the application of technology. And I think you're even going to do the opening, little keynote there. So I will be there with you.
Kind of a mini keynote.
I will be there. Well, hold on. Let me just say what I'm going to say. I'm going to be there because we're going to be doing the 6.5, talking to the executives at Cloudera, IBM, and others. But I will be in the front row heckling you because I'll be like, Pat, are we connecting the back end to the front end already? Because that's what's got to happen, right? I mean, we really got to talk about that in a hybrid data fabric. How do we connect the back end to the front end so that companies can get better insights? I mean,
that is exactly. I mean, you nailed it. In fact, next year, I think you need to be up here. And I don't even consider it a keynote. I really consider it MC plus, right?
No.
Kind of a table setter. Here's what you should be doing during this. But I don't know. Maybe I worked on a script last night in the car coming back from the airport.
You're going to crush it. You're going to crush it. I believe in you. I believe in you. So big week, though. A lot of announcements. You can count on us doing a post-mortem analysis of these events. You can be sure we're going to talk about them. But more than anything, man, 1, events are back. 2, they're in person. 3, we need a time machine. 4, we are really excited to get out there, constantly hear what's going on. 5, it's all about the cloud. And 6, we did the 6.5 in under 40 minutes, Pat.
How about that? Listen, I want to thank everybody for tuning in. Daniel and I are going to be taking rides in autonomous trucks today. Gosh, we have a great job, man. I just get a big smile on my face.
Is it an Apple truck? We're in Cupertino.
We are going to Cupertino. I'm going to let everybody kind of, I don't know, maybe guess at who we're visiting. And you're probably going to be wrong, but that's okay. We love you, everybody out there who follows us here. We just thank you and for your commitment and tuning in, whether it's your night, whether it's your day. We appreciate you, or even if you're just eating lunch. So y'all have a great week. Right? No.
Hit that subscribe button. We'll see you later.
I like your artwork. Okay. Bye, everybody. Take care. Love you.